video for Monday, September 29th. Markets did finish the week with an up day. Looking at the analysis, though, I do think the markets are still in trouble. The up days are really a non-event, very quiet, subdued trading, lack of volume on up days. So we just have some short covering rallies. In between some good sell-offs. So I want to go into the chart. We're going to pay attention to one thing we're going to look at is the dollar. The other, we're going to be continually looking at key levels here in the Russell 2000. And I mentioned a few weeks back that the Russell may be the canary in the coal mine here. With the dollar now breaking out to yearly highs, I'm going to show that to you. So our internals, as we continue to move up and down in the marketplace, are continually deteriorating. So not a good sign here. And I want to show this to you. So I would be looking right now, if I were to call something, I wouldn't be calling a top just yet, but I would say that I'd be looking to short rallies in the marketplace here with keeping tight stops if you are looking to swing trade. Problem with day trading at the moment is every time the markets do go down, they open down pretty substantially, and then you have to wait for a setup. That's the problem. But there are some good setups to be had, and I do think the markets are going to really pick up on some extreme volatility coming into October, and then we would really reevaluate it. But let's see what happens today. Today should be interesting. We do have the end of the month coming up today, tomorrow, so we do have mutual fund inflows. We'll see if that's going to be a factor today, pushing the markets higher. Yet again, get some follow through. But as we closely get into October, that's going to be something I'm going to be watching really closely. And also, don't forget, we have the non-farm payroll numbers that come out on Friday. Okay, so let's get right to it. We have the bullish percent here. As you can see, we really have no bounce into that 8. And that's what I'd like to see, something like this, a bounce into the 8, look to get short the market, and see if we get a roll over here. But that's not obviously even giving us an opportunity. So this tells me the internals are very, very weak. As I always show you the New York Stock Exchange advanced decline with volume, we're really breaking down here. Now we're getting into these washout areas. I don't see it yet, but if we can really wash out and really break down hard, we might be able to get a decent bounce here. And that's really what I'm waiting for in order for me to get crazy to short the market here. That's why I'm not really putting that out there. I'd like to see the McClellan oscillator get back down below 90-ish, somewhere around here at the lower end of that Bollinger Band. And then if that were to happen, we'd get a decent sell-off day. Then I think that some of these indicators would get washed out where we can at least buy the market. And then that move up and it fails, that's when we look to get short. So that's really my plan here. And markets never really gave us a good opportunity to get short, unless again you're holding positions, which I'm not. So that's the only issue here. But if you short, you can look to get short at any levels. I'm going to show you a couple of key levels here. First, let's take a look at the dollar. You can see the dollar is very extended. We've been up now 11 weeks straight up in a row. That's the weekly chart. I'm going to show you where I think we might get some trouble with the dollar continuing here. If you go to the monthly chart, we have a 200-month moving average. Okay, that's pretty substantial, and that has capped all of this rally way back when, since 2005. Okay, now you get into that, and also we're going to have some different areas of resistance as we come in to approach these levels here. So I do think that might have a little bit more room, but at the first touch, at the least the very first touch, I think you're going to get a roll back to revision to the mean, and that would be basically going into that 8-week moving average, or even at that would be at the first 8-week moving average, or at least this 84.50 before it continues to move higher. So again, when that happens, watch the commodities. You might catch a bid in those commodities, those oversold commodities, beaten down commodities, especially crude oil. All right, now let's take a look at the ES. As you can see here, we are literally breaking down. You notice the candlesticks are very large to the downside. We have large engulfing red candlesticks versus the up candles, and very little volume. The down days have above average volume here. So we do have some definite distribution selling. Institutions are definitely selling into this. Okay, so this is where you have to be careful. Now, we broke the 50-day moving average on the ES, okay, where the other indices are holding barely at the 50-day moving average. and I'm going to show that to you now. Here's that Head and Shoulders that I introduced to you guys last week. Here's the neckline measured down to 1922. We did break up, and I said just be careful here because if we take out the right shoulder, I would be less inclined to be looking to short the market, but that did not happen, and we rolled again, and now we're making a lower high from this previous high to this ultra high here at the 2014 50 area, right? So now we are breaking down this morning, and we're below the neckline again. So again, any back test into that neckline and holds, your trade is easy to manage here because you're going to know where your stops are, and I would be looking for lower prices, at least at 1922. That's where I'm looking for. So any bounces in the marketplace, we get a quick washout. We might be able to get a bounce maybe back up into here. Let's say we take this area out, we wash out, and then break back up again, and then maybe we test this 200 day. Or 200, excuse me, the 200 hourly, I would be inclined to look to get short the market if we had that opportunity to get breakdown, let it rally, and then let it fail at these areas here. So that's a good spot. But remember, we do have a downtrend forming now, and we have definitely have triggered the Head and Shoulders pattern on the hourly chart. Diamonds broke the 8, the 20, the 34. It broke the 50, got back up above it on Friday. Let's see if it holds. But this is one of the index that is clinging to the 50-day moving average. As we have the IWMs, really broke way down below it. Now, the IWMs, I believe, is in trouble. And I think that this is definitely the index that's going to bring the other indexes down. Or if it's not doing so already. As you can see, we had a breakdown early in the first quarter. We rallied back up, played catch-up. We did a test of the upper highs here. We failed miserably. Now we tried and we failed, and we're at the 110. This is a 108 where this is the level that you need to watch. We're a couple points away, but this level needs to watch. You need to watch this level closely, and I'll show you why. If you get into the weekly chart, you'll see this is a very important level. This is all of 2012, okay, and all of 2000 and pretty much held and true of 2013. So you need to really watch this. 2013, 2014 here. So if we break this level down, then we're going to be looking to test this 200-week moving average with little points of support here, but this is going to be the real key, and I'll put some Fibonacci extensions down here, look for some targets, but this is a big area, 108, that really needs to be watched closely, okay? Let's take a look at the transports. Again, clinging to the 50-day moving average. I think your first test is going to be the lower trend line support, and then, of course, this area of support as we held back in August, this little pivotal area here. So this is going to be the spot, guys, right here and then here. And if transports start to break down, which is a key leader, starting to follow the Russell lower, well, then you're going to have the Qs start to go lower as well. Okay, so just let's keep an eye on some of these high beta names because they are going to be tested as they are being tested right now. The price lines, the LinkedIns, the Teslas, Baidu, Apple, if you will, any of the high beta names that have led the market higher, they are now rolling over and leading the market lower. So that is not a good sign. So let's keep an eye on this market closely. Remember, we have non-farm payroll numbers come out, and then we'll have another big update tomorrow. Have a great day, everybody.